Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased technical analysis. Okay, now guys, remember my videos are dedicated to day traders. I just identify setups for us to trade in the short term. Okay, and shout out to Elvis, was listening to Polk, Salad, and great song. Now there's two things that I want to talk to you guys about today. One is my usual technical setups, okay? The levels I'm watching, the setups I'm watching, and how I would trade it, okay? And the second thing is seasonality, all right? And I'm gonna talk about seasonality because I was asked by some viewers, and I'm gonna, hook it up today with my perspective on seasonality, okay? But I'm gonna start off with the daily chart of the SPY. Now, guys, remember I talked about in my last video, the bottom is not in unless we can clear the 200-day moving average. Okay, we've been in a downtrend since January, all right, and we are still below that 200-day moving average. This past week we had a hot stove rejection. The price did not stay there for too long. As soon as it touched that level, it rejected instantly. Okay, hot stove rejection is like touching a hot pot and your hand just pull back very fast. That's exactly what happened, and we finally got a pullback. Okay, I got my Fibonacci levels from January high down to June low, and the 50% retracement level was at 421. Okay, and yesterday on Friday we finally got the back test off that level after clearing it way back on August 12th. All right, cleared August 12th. Back test. Keep the back test and go strategy in mind. I make a video about this concept. It's one of the trade setups that I use. I personally use intraday, daily chart, all that happy stuff. Okay, keep that concept in mind. All right, video link about that in the description below. Check it out if you don't know about it, but most of you guys, I'm assuming, know about it. So we're back testing the breakout level as a support, and it held. If you watch yesterday's price action towards the end of the day, when it finally hit around the 421-ish level, it went as low as 421.22, 22 cents shy of my price target. It's not bad. I can't see the future, but we did get buying pressure from that at the end of the day. So here's the setup that I'm watching. For a bearish setup, I need to see 421 fail. All right, I need to see how we had some buy demands, some demands yesterday on Friday. I want to see on Monday that those demand is getting taken out. We're burning through it. 421 fail. My next level is the 418.5 level. I also have fib levels from March 2020 low to January 2020. January 2022 high. That's the blue Fibonacci levels. Okay. These pink ones, these are Fibonacci levels all the way back from 1993 to January 2022 high. Okay, so if you guys wonder what the pink line is, but 418.5 is based on my 23.6 retracement level of March low to January 2022 high. Okay, very bearish if that fails as well. And then I have 417 below that. That was the high back in June, and early August is chop. All right, so 417 is a level we should be watching. I'll be watching. All right, I have 415 below that. That was the equilibrium level of the chop. And then we got the gap. We got that big old gap around 412, 412.5-ish. All right, right here. We gapped up. Haven't filled that yet. Could get filled. So that's my bearish setup. We always want to look to short or look for puts when critical support levels fail. Look what happened when 425 failed. Like my last video, I said below 425, I would favor 421. Look what happened. Okay, so like I said, 421 fails. That would trigger my bearish scenario down to 418.5, 417, 415, and possibly gap fill around 412-ish. Bullish scenario is simple. We need to recapture some previous lost support levels. I have a level at 423. Right, I have a level at 425 that I mentioned. That was a very critical level. Okay, and another critical level is my 428.5-ish level. I have a level of around 427 as well. Please add these to your charts. All right, 423 relative to where SPY is now. Resistance at 423, 425, 427, the critical one at 428.5. I want to address the critical levels, okay? Obviously, 425 is one, and you guys already know that. Clearing that would be a big win for the bulls. However, 428.5 is based on this orange trend line right here that connects March 8th, March 14th, April 25th low. All right, and we chopped around that, got a false breakout of that trend line back on August 17th, back tested it as a resistant on August 18th, and look what happened the next day when we dropped down to 421-ish. Okay, the back test and go strategy works from the upside into the downside. Right now we have a setup that if 421 holds, this could build up some energy to push back a little higher. Okay, because RSI is no longer overbought. That favors the bulls. Okay. So yeah, above 420.5 puts the 200-day moving average back in play, which is currently around 431-ish now. And then the breakout of my multi-month trend line connected all-time high to March 29th high. All right, almost got a touch of it this past week, but didn't get that third touch. So the third touch, if it tests, would be around 432-ish for next week. Okay, above 432-ish would be the breakout. Very bullish if it breaks out and puts 435 in play. That's my 61.8 retracement level. Okay, now one thing I want to mention about this trend line is that it's possible that we could get a false breakout scenario setup, which would be very bullish. Okay, now what I just did, all right, assuming we do get a false breakout scenario, the reason why I think that's possible is because there's a big area of liquidity up there. I'm not the only one noticing this trend line from all-time highs to March 29th high. Okay, if I can notice it, market makers will definitely know it, and they will look to trick us out as best as they can. All right, so if it break out of this multi-month trend line, it's possible there's a bunch of stop losses up there that market makers will look to hit and then push it back down. Okay, consider it like this is a picture I got. Here's the support levels or whatever. Clusters of stop loss just below it. And the same for resistance. Cluster of stop loss would be above it. So I'm not saying that's going to happen or I'm making any predictions here. I'm just saying that's something we want to be mindful of. Okay, trying to put ourselves in the market maker's position from their perspective. All right, so above 423 will be a start. 425 will be a big win. 427, 428.5 based on this trend line, very critical, and then it could trigger more upside. Okay, but bearish scenario will trigger below 421. All right, guys. Now the last thing I wanted to talk about SPY is the seasonality. I talked about a little bit in my Discord. Okay, here's the seasonality. So far, still tracking well this year. The only thing that did not track was the April rally. We actually got an April dump instead. Okay, now for anybody saying the seasonality doesn't work, that comment right there doesn't even make sense, because seasonality is just data based on the average of the last 20 years. It's not supposed to match the current price action tick for tick, guys. It's just showing us the tendencies of SPY during certain periods of time. Okay, now it showed we had a tendency to rally from mid to late June throughout July and then pull back around August. Tendency, not match tick for tick, just the tendencies. And you can see here we got since June, mid-June, got the rally, and we are pulling back in early August. Okay, after the July rally. Okay, so according to this, August has a tendency to finish the end of the month strong heading into September. All right, I'm only covering this because I was asked. Don't shoot the messenger. It's not guaranteed it will follow, guys. All right, it's just the average of the last 20 years, and it just shows us the tendency of SPY. It's not going to show us the crystal ball future of SPY. All right, because like I said, remember the levels that I just gave you. All right, that is what I want you guys to pay attention to the most. Moving on to Triple Q. Triple Q is testing my 38.2 retracement level from November high down to June low. Okay, so it's at 322.4. If that is lost, that is very bearish, guys. That's a false breakout of a very critical level, similar to SPY's 421. This is the equivalent for Triple Q right now at 322.4. If that fails, I have 318 in play. You see this orange trend line, multi-month trend line? It had about four touches on it, and then we broke out of it back in early August. A back test of this would be 318, okay? So below 318, another false breakout setup, which would put 315.4-ish. What else do I got? 311, 308.7, and then around 304 are my downside targets. The only way I would be bearish or look for calls is if it clears some resistance, starting with 325, putting 326.4-ish back in play, 329.7, very critical level there, and maybe we can go back and test 334.5-ish. Okay, guys, Tesla, it managed to hold that 878 level, and it managed to close above 887. Not too bearish, but not too bullish either, because it still closed below the 200-day moving average, that pink line right there, which is sitting around 903.92. So unless Tesla recaptures that level, I'm not bullish on it. I will watch though if we can take out some support levels, 887, 878, 858, very critical level, the 842-ish. All right. To be bullish, it simply needs to recapture the 200-day moving average, which would put 913-ish back in play, 923.5-ish, 931.5-ish, and then 940.8-ish. Okay, that's what I have today for you guys as far as levels go for my top three. Well, two of them are ETF and Tesla is a stock. All right, here is the flow sentiment. Very bearish, 96%. Look at these big orders, $1 million worth in sweeps. Big size, 5,000, 10,000, 5,000, over 9,000, like Vegeta says, over 10,000 here. Okay, 5,000. Big size order, very bearish. Okay, could they be hedges? I don't know. Could they be just regular good old puts, betting to the downside, aggressive plays? Possible. Okay, but we got to combine this data with the price action. Okay, so bearish, you need to lose that 421 level. Okay. QQQ, 74% in the puts, okay? All right, so big money still bearish on that for what it looks like, but it could be hedges. And Tesla's actually bearish, 70% to end the week, to end Friday into puts, okay? So that's what I have for you guys today. Thank you guys so much for watching. Peace.